They do, and no doubt being helped by some of the bullish comments out from Nvidia's CEO as well, Jensen Huang, talking about the fact that they need more chips coming from TSMC. Now, we did have some sales numbers out of that company just overnight as well, 16.9% for October, which is the slowest sales growth in more than 18 months, but almost 17% growth is still nothing to scoff at.
Yeah, and these comments obviously on the back of Jensen really trying to thread the needle when it comes to China relations as well as U.S. relations. But he obviously talked to some executives from Taiwan Semi and really talking about the fact that growth for AI is continuing to accelerate on a month-over-month basis. And they're going to need to have more chips being produced by Taiwan Semiconductor. And that's obviously giving not only just that bullish tone when it comes to the tech space, but also when you're looking at the memory names, the Western Digitals of the world, Microns. They really did not see a pullback last week. Those are companies that have been valued pretty cheaply compared to maybe some others in the space, and it continues to be a catch-up trade that a lot of traders really do appreciate, at least at this point in time. And we are not seeing it when it comes to the fundamentals of a lot of these companies, especially when you're looking at the mega cap names. They're still spending on CapEx. That should also obviously increase demand when it comes to Nvidia, and that also should translate to Taiwan Semiconductor as well. But if you even take the AI trade out of it, are we seeing maybe a refresh cycle when it comes to consumer handheld devices, the Apples of the world, the iPhones, things of that nature? And if that is also taking place, that's actually a margin driver for Taiwan Semi. That's where they make the bulk of their money when you're looking at profitability. And that also could be a tailwind for them over the next year or 2 years. So this is a company that's been able to perform. They obviously have a little bit of a monopoly in this market. And the comments that we heard from Jensen over the weekend here is just a testament to their stability, if you will, when it comes to the overall.
The Q3 earnings from Nvidia are highly anticipated by Wall Street. Nvidia has a track record of exceeding analysts' projections, and it appears likely that the business will do so once more on November 19th. Nonetheless, Nvidia's share price already accounts for huge growth prospects. Nvidia's big day is drawing near. On Wednesday, November 19th, after the market closes, the massive chipmaker is expected to release its fiscal 2026 third quarter results. In the past, quarterly updates have acted as significant catalysts for Nvidia stock. There is a good chance that history will repeat itself. Should you purchase Nvidia stock in bulk before November 19th? According to Nvidia's third quarter fiscal 2026 estimate, the company's top-line revenue is expected to be approximately $54 billion. That falls within the range of the Wall Street consensus estimate of about $54.8 billion. If analysts are correct, the corporation will see a remarkable 56% increase in revenue over the previous year. For Q3, the chipmaker did not offer earnings and bottom-line guidance. Nonetheless, Nvidia provided certain data, such as projected gross margins, operating costs, and tax rates that aided analysts in their forecasts. During Nvidia's Q2 results call, management also gave some clues. For instance, according to CFO Colette Kress, production of GB300 chips, which combine ARM's CPUs with Nvidia's GPUs, should pick up speed in Q3. Additionally, she stated that the markets for agentic AI and AI inference with reasoning are expanding quickly. According to CEO Jensen Huang, Nvidia is witnessing a tremendous level of demand and interest in AI. In light of all of this, analysts polled by S&P Global predict that Nvidia will report adjusted earnings per share of $125 in Q3. This figure shows a 54% increase from the previous year. Even though Wall Street expects Nvidia to grow at an explosive rate in Q3, the stock is unlikely to leap just by matching projections. For that to occur, the GPU manufacturer must exceed analysts' earnings projections. The good news is that Nvidia has a strong history of exceeding projections. Over the past 4 quarters, the company has exceeded Wall Street's profits projections by an average of about 6.5%. When Nvidia releases its Q3 results, investors have good reason to expect it to surpass analysts' projections by even more. Why? In their most recent quarterly reports, all of the main cloud service providers stated that they intend to increase their investments in AI infrastructure. Meta Platforms, a non-cloud provider that is placing a significant wager on the development of AI superintelligence, did the same. Even while Nvidia's profit figures aren't quite as impressive, it's still feasible that the company's stock may soar after its Q3 report. Strong results from the previous quarter are not as appealing to investors as an unusually optimistic prognosis for the future. During the company's Q2 earnings call, Huang hinted at something that would make this scenario possible. He disclosed that Nvidia has really important projections for the upcoming year from its major clients. Additionally, he brought up the rapidly increasing number of AI startups that will require GPUs. Should you purchase Nvidia stock in bulk before November 19th? If you think the company will trounce Wall Street's profit projections and present an unusually bullish assessment of prospects over the next several quarters, the answer is probably yes. But before Nvidia releases its earnings later this month, there are strong reasons not to buy the company outright. For starters, the stock's forward price-to-earnings ratio is just under 30, indicating that substantial growth potential are already factored into the share price. Almost everyone is hoping that Nvidia's Q3 upgrade will be a huge success. The stock may decline rather than rise if the GPU manufacturer only achieves a double or a treble. The fact that purchasing Nvidia is not required with a long-term investment strategy is a more significant reason why you might not want to do so. In the long run, it won't matter if you buy shares before or after Nvidia's Q3 report, if you think the firm will continue to benefit from the rapidly growing use of AI for years to come. Time in the market is better than timing the market, according to a famous investment proverb. In recent years, investor interest in artificial intelligence, AI, has caused technology stocks to soar higher. Investors want to invest in major companies early in their growth story, since AI has the potential to be a game changer. With an overwhelming amount of buy ratings and forecasts predicting more gains in Nvidia stock, Wall Street is particularly fond of Nvidia. The main force behind the AI boom is Nvidia. This is because the company creates the most potent AI chips available, which power inevitable AI tasks, like training models, to tackle complicated issues. Additionally, Nvidia has created a broad range of AI services and products, which has resulted in skyrocketing profits. In the most recent full year, for instance, Nvidia's revenue and net income increased by triple digits to over $130 billion and $72 billion respectively. Despite the fact that Nvidia's stock has increased by 1,200% in the last 3 years, Wall Street anticipates further growth. A 22% rise over the next 12 months is predicted by analysts on average. Rumble is taking a risk to further its aspirations for cloud computing and artificial intelligence. In a move that could make Rumble a significant player in AI infrastructure, the US video sharing and cloud services platform announced that it would buy Northern Data of Germany for up to $970 million. Stablecoin behemoth Tether is one of the company's supporters, giving the combination additional financial clout. After it is finished, Rumble will have access to Northern Data's potent GPU collection, which includes over 40,000 Nvidia chips, putting it in a stronger position to compete in AI-driven cloud computing. The deal is intended to expedite Rumble's global expansion strategy and is anticipated to close in the second quarter of 2026. In terms of the agreement, Northern Data stockholders will get 2.0281 newly issued Rumble Class A shares for each Northern Data share. Based on Rumble's most recent closing price, the firm is valued at about $767 million or $11. Additionally, if a separate sale of Northern Data's former Corpus Christi data center in Texas is successful, they might receive up to $200 million in cash. Investors in Northern Data would own about 30.4% of the combined business if all shares were tendered. Tether has already consented to tender its shares, as have affiliates of Arush Thilainathan, co-CEO of Northern Data, who collectively own roughly 72% of the German company. Part of the agreement, Rumble would take out a $610 million loan from Tether and pay back half of it with newly issued Rumble shares, which are valued at $7.88 each. Collaboration strengthens an already Tether is expected to become a major client of the merged company after investing $775 million in Rumble earlier this year. There may be more to Rumble. It's a calculated step into the AI era, providing the business with the means industry's fastest-growing arenas while partnering with a powerful investor who is making significant bets on digital infrastructure. Some Wall Street experts believe that the U.S. stock rise in 2026 will be driven by concerns about an uncertain rate outlook prove to be fleeting. According to Michael Wilson of Morgan Stanley, there were clear signs that U.S. companies were having more pricing power and that an earnings recovery was under progress. Additionally, he highlighted a trough in the number of analysts down. Wilson stated in an interview that, although the closure and overcurrent price action, these are only short-term obstacles on the path to a strong 2026 propelled by profits growth. Even when stocks were rocked by an increase in U.S. trade tensions and more shutdown, the strategist has continued to be one of the more optimistic voices this year. Sentiment was further damaged by Fed Chair Jerome Powell's caution that as the Senate took a significant step toward reopening the government, U.S. stock futures increased on Monday. According to data collated by Bloomberg Intelligence, S&P 500 businesses reported a rough third-quarter profits, indicating that the earnings season has been far stronger than anticipated. For the third consecutive year, the S&P 500 has increased by 14% in 2025. Since mid-October, more experts have increased rather than decreased their projections, according to Citigroup Index. Now, the emphasis shifts to Nvidia's results, which are scheduled for next week, in search of hint direction of artificial intelligence. According to strategists at UBS Group AG, tech firms will once more account for the majority of U.S. earnings growth in the upcoming year. All things considered, they predict that the S&P 500 will reach a record 7,500 points by the end of 2026, indicating increases of more than 11% from present levels. John Stoltzfus, a strategist at Oppenheimer Asset Management, stated that it was premature to give up on chip makers and the prospects for artificial intelligence. Instead of signaling the start of a more severe phase of collapse, the current soft represented in the major indexes appears to be somewhere between a haircut and a trim, according to Stoltzfus. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Let's talk about tech sentiment. So we saw a pullback last week after just a monster run this year. From your vantage point, was this that, kind of garden variety profit taking?
I think so. We're certainly getting closer to the end of the year. The infrastructure trade has had a really unprecedented run. I do think that, a pullback was necessary at some point. Listen, I think in the short term, we all know that supply constraints are really dictating kind of revenues, and we're, more than meeting demand. I think investors are really trying to get a sense as to these very large commitments that we're hearing from the hyperscalers, right? This has been all throughout the news the past couple of months. How do those really translate over the next couple of years, right? I think as we look at 2027 consensus, I think there's a lot of kind of credence to the point of view that potentially those are a little bit low as we look at translating some of these large announcements into kind of real capacity plans. But, it's such a complex supply chain we're trying to manage here. I think the constraints have shifted around the supply chain. At times it's been wafers, times it's been packaging. We're hearing a lot in the memory sector right now, spot prices spiking, huge memory requirements coming in. I think that, the AI utility trade has really been the area that's taken off in the most recent weeks. And I think, that's because the supply constraint really seems to be on the power side right now. So I think there's a lot of kind of triangulation going up and down the supply chain as to really where those constraints sit. And, I think that the market's actually doing a pretty good job of kind of not overbuilding on any one component, given we're, not quite sure at any given point what the long pole in the tent is.
I want to dig into that a little bit, kind of, I guess, potential choke points, because, for instance, I'm sure it came across your radar with Nvidia CEO Jensen Huang saying they need more supplies from Taiwan Semi. Exactly. So, where do you see the biggest choke points? Is it the chips and GPUs? Is it the supplies, is it the power, as you mentioned? Where do you see that? Because, again, when I look across the landscape, it seems like the biggest issue is supply, not demand.
Absolutely. I mean, I think we see demand outpacing supply for, at least the next couple of years. It really feels like there's a analysis going on across the market right now to try to figure out, does this cross in 28, 29, 30? I mean, I think the visibility is, viewed to be really good out on the next several years. I think the constraint right now seems to be in and around the power side of things. I think we're really trying to understand kind of what energy we can bring online, where and when. And the supply chain will react very quickly to get the right componentry, the cooling, the chips, the memory, to those places, when that power can come online. But this is a multi-year planning process, and I think we still got to see TSMC convert a lot of this stuff to wafers for the equipment area, the memory area, and the fabless companies to really start to see those out year estimates start to come up a little bit.